just so you know that this is like some other events, this will be recorded. So I think I'm going to stop there and hand it off to my colleague Wendy, who's going to start with some introductions around global parametrics and the Natural Disaster Fund. And so off to you, Wendy.
Thanks very much, Dan. So if you just move to the first slide, I'll get right into it. As outlined by Dan, we announced our collaboration at the annual forum of the IGP in Madrid back in December of 2019, and with the aim to bring Meso-Level risk transfer solutions to low and middle income countries in order to combat the protection gap. The buy-in of all parties to this goal, so the commitment of 2 national governments and a leader in the private sector in Hanover Re, really validated our approach and our work, taking us into 2020 with a strong mandate to carry out our aims. And what a year it has been for the partnership. Although tumultuous, 2020 has brought with it a year of growth and innovation for Global Parametrics and the Natural Disaster Fund partnership. And the figures really speak for themselves. So looking at the highlighted summary impact figures for 2020, which are just on the slide here, we can see that through our collaboration, we reached over 10 million beneficiaries, providing some of the most vulnerable to natural hazard and extreme weather risk across the globe, with forms of risk protection they otherwise would not be able to access in 21 different countries across Asia, Africa, and Latin America. Global Parametrics has designed and developed indices for 6 different perils, namely earthquake, flood, tropical cyclone, drought, excess rain, and extratropical windstorm. These indices are global, with the ability to be developed for any location in the world. We've also had a year of payouts, which have not only validated our approach, but provided the much needed funds to those most vulnerable in the face of disaster. 2020 has been a record year for storms in the Atlantic, with hurricanes triggering 2 of our indices in Latin America and typhoons in the Asia Pacific triggering a further 3 indices in Southeast Asia. Although these events can be devastating, the payouts released as a consequence of an index triggering will hopefully provide some relief to beneficiaries where it's most needed. The increasing frequency and severity of natural hazard and extreme weather events caused by climate change is a global issue which requires a global solution. And through our cross-collaboration, we've been able to implement sustainable and impactful initiatives, which will hopefully act as a call to action for further cross-sector partnerships and communication within this space. I'm going to take you through a closer look about how the partnership operates. So just on the next slide, please, Sam. Thank you. We operate via the interconnectivity of a number of institutions, which is highlighted in the graph on this slide. I'm going to start with the Natural Disaster Fund of the NDF. It's a public-private partnership designed to mitigate the challenges in natural disaster resilience for low and middle income countries. As you can see from the right-hand side of the graph, KFW on behalf of BNZ and the UK's Foreign Commonwealth and Development Office, UK Aid, provide the initial capital to make up the Natural Disaster Fund. And through our partnership agreement, Hanover Re provides matching capital, effectively bringing one of the largest reinsurers in the world into our NDF transactions. The Natural Disaster Fund itself is a vehicle which is designed to underwrite natural hazard and extreme weather risk as a method to kickstart risk protection in areas where currently there's limited or no access to products. The NDF is mandated to operate in ODA eligible countries, and it looks to provide what we call additionality in the market. And this means providing a product which is currently unavailable or which can't be reached by a certain population. And this means that NDF transactions and initiatives are designed as a complement to pre-existing risk transfer markets, not a competitor. Products and arrangements which are underwritten by the NDF are also designed to be market builders in the space, leading the way for further products and players from reinsurance and capital markets to enter upon seeing the success of NDF transactions. So in this sense, the NDF is designed to be catalytic in the market. To the left of the graph, Global Parametrics designs, structures, and prices products which are then underwritten by the NDF partnership. GP uses modeled scientific data in its index development, allowing us to build an index for any location in the world, even where ground data is limited. Our products are based on parametric contracts which pay out based on a trigger of a pre-identified extreme weather or natural hazard event. By providing parametric products based on events rather than assets, asset damage or asset loss, our clients are better able to understand the loss which is intangible as a consequence of an event, such as business interruption or lost income. And in this sense, these products also complement traditional indemnity insurance based on asset loss. We engage with our clients using a Meso-Level approach to ultimately reach beneficiaries, which I'm going to explore in a little bit more detail just on the next slide. So while our macro solutions provide protection at the sovereign and supranational level, and micro solutions provide protection at the individual level, Meso-Level solutions provide protection at an organizational level, aggregating risk from the individual and from individual business. As is sort of shown on the graph here, the NDF partnership provides parametric risk transfer solutions as a method for an organization to hedge against extreme weather or natural hazard risk. Using the parametric index, a payout is made once the index is triggered by a pre-identified event in an objective and a transparent manner. And depending on the sector of operation for the client, this capital could be distributed to ultimate beneficiaries in a number of ways. So for example, through local government via a social protection program as emergency response following a tropical cyclone, or a local financial institution shoring up its balance sheet and continuing to lend through a prolonged drought. Providing protection in this way is beneficial in many ways. So the risk is aggregated across individuals. This results in less expensive transactional costs, lower premiums for the client, and an ease and scale in future transactions. Issues of basis risk as well are also minimized by aggregating the risk. Harnessing pre-existing distribution lines means that the number of ultimate beneficiaries is increased with minimal startup costs and pre-existing expertise from the client also being harnessed in the startup of the program. So we're now going to delve into some of our transactions for 2020 with specific case studies into the structure and the impact of each. I'm going to leave you with my colleague Juan Marcano, who is head of business development for our Mexico transactions. And he's going to discuss the Mexico Reef Protection Program. Thanks, everyone.
Sorry, Juan, we can't hear you, unfortunately. Can't hear you, sorry. Okay, yeah, why don't you use to? Yeah, I can hear you. I can hear that. Maybe. Hey, Gecko. Sorry. No, I can't hear you.
Yes?
Yes.
Okay.
Got it.
Let's go.
Go. Thanks.
So, apologies for the technical difficulties. I'll give you a brief description of one of the most interesting transactions that I've come across of late. So this is a project that was initially started in 2018 with the help of the Nature Conservancy and another one of the largest reinsurers in the market. And the idea was to not to protect an asset, but to protect a natural asset. And this particular one, the Mesoamerican Reef, provides not only physical protection to the Yucatan Peninsula, but also provides the base to significant financial activity in the state of Quintana Roo. This solution was a typical catastrophe in a box, cat in a box solution, where you design a specific area and also define a specific peril that if it happens within that defined area, there is a payment. In this particular case, the peril was tropical cyclone or hurricanes above a certain magnitude. In this particular case was category 3 and above, or 100 knots. And the area was an ear-shaped polygon that covered most of the coast of Quintana Roo. This program is managed by a specific fund that it was set up to distribute the proceeds of this policy. And the idea of the fund is to repair the damage caused by hurricanes in order to maintain the health of the reef to benefit the financial activity of the people who live in the area. In this transaction, we work with a local insurer, Banorte, and with the help of our colleagues for Hanover Re, to structure a solution that it was affordable for the government of Quintana Roo. Why do I mention affordable? In the initial year of the program, they had the support, financial support of the Nature Conservancy to cover part of the premium. This time around, they did not have that support. And it was thought that the solution would be not backed by the market. So in a public tender process, we provided not only a competitive price, but also a significant amount of limit, the total amount covered to benefit this program. This program was put to the test on early October by Hurricane Delta that cut across the peninsula of Yucatan at a speed of 100 knots, exactly the triggering point. This resulted in a payment to the fund that manages this program of 40% of the total limit. Now, this payment was effective within 15 days or 15 calendar days, or just 2.5 business weeks, which is significantly faster than a traditional insurance policy would have paid. Interestingly enough, the government of Quintana Roo was not only pleased with the outcome of this program, but they're under discussions initially at the moment to increase the size of the program to cover a larger geography, but also increase the mandate of the program to include repair of the beaches on the Peninsula Maya, and also the dunes that represent another barrier against the threat of hurricanes. So by backing this program, we're making one of the, I think, the first active nature-based solution that's been past the pilot stage. And I think that's something to be celebrated, and it gives us emphasis to carry on. I'm going to keep it short, and I will be available to answer any questions you might have with regards to this particular program. And I'm going to hand over now to my other colleague, Toby Berman.
Hello, everyone, and thanks for taking the time to join this presentation. I'm Toby Berman, and I help running the innovation and partnerships at Global Parametrics. The case study I'm going to talk about today is the VisionFund ARDIS program. And the ARDIS program is a true insurer resilience success story, supported by many actors amongst and across the insurer resilience partnership. And it's been going now since 2018, so it's a long-term program as well. The Global Parametrics' role is we help support the recovery lending aspect for VisionFund. And recovery lending is when a disaster happens, the local microfinance institution, which VisionFund is sort of their partners in country, can still lend into the disaster rather than stopping it. And that's enabled by both contingent credit, which is provided through IIF Blue Orchard, and a sort of a risk transfer product from Global Parametrics. The program was launched in 2018 with 5 countries. We've now scaled it to 15 countries across Africa, Asia, and Latin America. At its time, it was considered the largest non-governmental climate insurance program in the world. I would say it's definitely now the largest non-governmental climate insurance program in the world. It covers drought, flood, earthquake, tropical cyclone, excess rain risks, And it is a truly global program where we're protecting the most vulnerable, who are the clients of VisionFund on the ground, through this Meso-Level approach that we've described. If we can go to the next slide. So there are many beneficiaries, not necessarily direct, but also indirect as well, who are reached by the scheme. It's probably, depending on households, the numbers can be, but we estimate around 8 million people have been directly affected by the scheme since 2018. In 2020, this program was actually activated 4 times to prove that these programs actually work, with access to about 4 million of contingent credits, and also just over 300,000 of actual capital from the NDF, to enable active borrowers in 3 continents to actually benefit from recovery lending. So we have flooding in Myanmar, we have seasonal drought in Myanmar, tropical Vamco in Vietnam, and Hurricane Ota in Honduras. The important thing to mention here is that none of these products were available to these people before this program was launched. Every one of them has been, the payment to VisionFund was within a week, so the access to capital from VisionFund was very quick. And it also shows that these programs, not only do they set up and they run, but they also pay out, which is I think a great success story. Anyway, I will sort of move on to my other colleague. Again, any questions would just leave to later. Thank you.
Okay, very great. Thanks, Toby. Thanks, Juan and Wendy. I'll pick up this last one, and then we'll move on to the broader dialogue as well. So just one more case study here is a recent transaction with Acre Fund. Some of you probably are familiar with this group that operates in Africa, providing services and other financial support and technical support to farmers. This transaction mentioned here was completed in Tanzania. And it was a protection for them against drought and excess rainfall. I think just like the other 2 case studies, this is an example wherein Global Parametrics, via the Natural Disaster Fund and supported by Hanover Re, is actually transacting with the organization Acre Fund. We're not, as a Meso-Level solution, we're not transacting with any of the farmers on the ground in Tanzania, but we have designed a tailored product that is seeking to provide them the financial resources they need via Acre Fund. And Acre Fund has various service relationships with these borrowers, but it is not a microinsurance policy. It is a Meso-Level protection. This program represents the first deployment of GP's water balance index. So we've been working on over some time and rolling out this year, and the first deployment of it in Africa. But certainly we have a number of other opportunities to deploy it in the coming months. And overall, there's in excess of 400,000 people that are benefiting from this program, 70,000 households in this community via Acre Fund. And you see the graphic there on the left. These are the farmers are distributed across districts and across Acre's operations, and the product through the water balance index is designed to cover these groups of farmers directly to Acre Fund, but ultimately Acre is in charge of distributing any payouts to those communities in the event of a drought or an extreme rainfall event. So we'll stop there with the sort of run through of the year, and then move on to sort of what is the key vehicle, the NDF, that is really catalyzing some of these success stories. And just want to reflect back quickly before we get into the discussion about this diagram that Wendy articulated earlier, and remind everyone this Natural Disaster Fund is the vehicle that Global Parametrics manages, and it represents a public-private partnership between both the British government and the German government, and also now in collaboration with Hanover Re as of the annual forum of last year when that was announced. So for this event, I'd like to bring in my colleague Henning Ludolfs from Hanover Re, managing director there, and also call on Stefan Hirsche of KfW, principal portfolio manager there. And the idea of this discussion is really to sort of elaborate a bit on this unique public-private partnership that is really focused on catalyzing risk transfer mechanisms in emerging economies. So welcome Henning and welcome Stefan. Thanks for coming in today and being available for this discussion. I'm going to turn first to Stefan. As far as representing sort of the public side of this engagement, and wanted to, as one of the earliest supporters of global parametrics and the NDF, Stefan, you've certainly been here from the beginning with us, and now with the NDF as well. And I just wanted to get your perspective from sort of KfW, BMZ angle. Why did you guys come in to support the NDF? What is it about the NDF that really motivated your support?
Thank you, Dan. Thanks for having me. Oops.
Yep, we hear you.
Okay, good. I with KfW, and for the past 6 years, we have been working together with you and your team to bring a working Meso-Level solution to the market in order to create a large-scale risk transfer of climate risks from developing countries onto the international reinsurance and global capital markets. So, and that's what we believe in. We believe that we need in a world with more extreme events, need players that can close the loop between the micro-insurance, individual policies for individual clients, and the macro schemes that are assistant to the government of this world and intergovernmental cooperation that help protect or help Meso-Level entities that work with the desired target group of poor and vulnerable people and help them protect their client base, their beneficiaries in the case of humanitarian actors, and also their suppliers in the case of, for example, farm producers and buyers from local produce for both local and international consumption.
Great, thanks. That's helpful. And I guess just following on that, what you said, specifically, how is BMZ and KfW supporting the NDF in your financial, from a financial perspective and otherwise?
Well, we're very happy to do that together with the UK Foreign Commonwealth and Development Office, FCDO. We have both been involved in establishing Global Parametrics as an innovative high-tech startup to provide these services. So we have both invested into the equity of Global Parametrics, FCDO directly, and we for the German government through the Resilience Investment Fund, helping to get this manager of the ground, the structure of these innovative products. And then we have, starting with FCDO in 2018, capitalized the Natural Disaster Fund, which is the risk pool that underwrites these derivatives or protection contracts for the Meso-Level entities that work with our target group. And in addition,
Great.
We provide some TA grants for actors, humanitarian actors that cannot afford the full development costs on their own accounts.
Thanks. And just for, I think this group probably has many ideas about why there is a role for the public sector here in addressing this sort of problem of the protection gap and Meso-Level solutions. But maybe in your own words, Stefan, what do you view as specifically the need for sector intervention here?
Well, we've seen that there has been not enough private sector initiative, that there was kind of a market failure, and we are hoping by offering a solution which is open to private sector cooperation, like with Hanover Re, to enable the creation of a global risk transfer market that really takes up those climate risks out of developing countries, which have so far been very limited transferred to global markets.
Great, and then that's a good transition over to Henning, perhaps representing that sort of the global capital markets and the private sector more specifically. I guess so, Henning. Maybe you could talk us through from Hanover's perspective. What drew you to a partnership with Global Parametrics and the NDF, and maybe you can speak through some of the process that you all went through to launch that collaboration that we announced last year at the annual forum.
Yeah, while we are in this, thanks Dan. While we are in this partnership, I could put it fairly briefly in saying, because we were a couple of partners who managed to put something in place which works. It's very simple and short. Of course, there's more behind it. Let me go a little bit deeper. In Hanover, probably as every larger company, we have a sustainability strategy, but in our sustainability strategy, there's an important element: contribute to reduction of the protection gap. On the other side, we think that innovative parametric concepts with fast payouts are really very effective in mitigating the impact from natural disasters, in particular natural disasters in low and middle income countries. And the NDF is exactly what they want to support. They want to support these parametric structures, designed and structured by Global Parametrics. So it's a perfect blend between our sustainability strategy and what the NDF wants to achieve. Based on this very good basis, another factor which makes it strong is when about 3 years ago we started to speak to the German and English government and Global Parametrics. It's easy to say, oh, let's try to put something to place, but it's not that easy to do. And 2 years after many very constructive discussions, we were able to last year launch our product, and happily now we can see that we are starting to fill it with life. There's one aspect in particular from a reinsurer which makes it also attractive. As a reinsurer, we have an interest in a large diversifying portfolio of risks, and usually reinsurers have a lot in the developed countries. Florida hurricane, earthquake, California. Of course, the risks which we are here looking at are new risks coming from countries where the insurance density isn't that high. So this is also attractive from the Hanover perspective. So this is on the why we think it's a great partnership and why we are partnering together with the NDF, Global Parametrics, Germany and England.
Great. Thank you, Henning. Oh, did you have more?
Maybe I should come a few points on
please.
How it works.
Yeah, great. Go for it.
We double what the NDF does. So the NDF makes a decision and wants to support a certain risk. And as long as this risk is within a certain frame, we double it. This means also we double the power of the NDF. So the NDF can do more and larger limits. There is a certain frame around it. So a risk where we automatically double the limit needs to fulfill certain criteria. These are, they can't be too high, any risk. It can't be too many years of a duration. There have to be minimum economics to make it commercially viable, and so on and so on. It does not mean if a certain risk doesn't fulfill it, we still can talk about it. But generally, as long as this frame is fulfilled, the limit will be doubled. And at the end, the NDF has approximately $50 million, I think a bit more, and we are adding on another $50 million. Here and there, I think this is more from the practicality point of view. We also support the NDF in getting to certain risks. For example, most parametric covers are derivative type of concepts, which is easily to support by the NDF. Sometimes these risks, however, come in based on parametric principles, but in an insurance or reinsurance form. Here, for example, we work together with the NDF to facilitate the transfer of risk from the beneficiary to the NDF. So there are lots of little pieces.
No, very helpful, and I think certainly the collaboration has lots of angles to it, and maybe we can articulate that a bit more, exactly how this collaboration is executed, from both sides, because there is really core skills that come from the public side and also from the private side, and just switching to back to you, Stefan. Maybe you can explain either how does KfW and BMZ contribute to the governance and the operations of the NDF. We got a little bit of flavor of how Hanover does, but maybe from your side, what's the real role of the public sector here?
Thanks, Dan. Let me start first by reiterating Henning's point and really appreciating the early entry of Hanover into this PPP, because while we were attempting to get the private sector to underwrite certain risks that the NDF would originate, we would have never expected, when we were starting the conceptualization of the NDF in 2015 or so, that we would, within a year of the NDF's formation, would have on board a private sector entity that is happy to contribute a capacity at pari passu level, doubling our existing capacity and accepting all transactions without an individual check once they are in the frame that Henning mentioned. So there's a lot of trust shown by Hanover Re in this modeling and structuring that Global Parametrics does, that it's a very viable, financially sustainable, and commercially sound solution. And what we from the public side bring to the table is that we ensure that all the risks that the NDF actually signs are of developmental benefit to the target group of poor and vulnerable people. So what we have set up as a governing structure is a very interesting one. So in the first step, GP is in discussion with a potential new client or an existing client regarding a new product, and the GP team feels that it would be a great contribution or could be underwritten by the NDF. They make so the first step they do is that they create a development proposal, development memo, where they detail the concept of the specific client and the product, indicate that how this is a developmental beneficial product, and what are the needs and, for example, TA grants that are necessary to develop this product, if any. So they make a proposal for a TA grant as part of the memo, and they look at the client and its environmental and social management system and lay that out. And one development committee, which consists of representatives of both FCDO and BMZ, they take a look at these development memos, and based on this development memo, they decide, yes, from a developmental purpose, this is, we can underwrite this, we like this, and we are happy for GP to develop it for the Natural Disaster Fund. Then comes the time and cost intensive GP with the client together developing the product, potentially pulling in other partners in the development, like Banorte as a local insurer and so on and so forth. And then once it's within the frame approved by the development committee, GP just has to present the final product with its pricing and structure and so on to a investment committee of professionals in the insurance space. So there is no more political decision making once the development committee has confirmed its consent, and it goes directly and after development to commercially constituted investment committee that then in looking at the individual contract proposed and the portfolio, and then decides whether that risk is adequate for the NDF to take on. And it includes a representative of Hanover Reef. And this is how this is working very well in the cooperation of the public and the private side. And the good thing for global parametrics is that in case, for example, there is a client that is not found to be, that is in developing country, active in developing countries, but is not basically found as so development to be beneficial by the development committee, GP can basically find a different capacity provider to carry the risk that they structure for this other client. So that's also a very helpful element, that GP is not forbidden to work with clients, but can have to find commercial providers of risk capacity in that case.
Great. Thanks, Stefan. And you know, you brought up the development committee that sort of passes it on to the investment committee and gave some guys nice color on that role. And you know, Henning, you know, from Hanover's perspective, as Stefan mentioned, you guys sit on the investment committee. I guess tell us a bit about the execution there and why. I guess, you know, maybe it's obvious, but why is it important that Hanover Re is participating in that function and some of the other elements that go along with that responsibility from Hanover's perspective?
But we want to be close to the developments and to the assessments. But the main reasons for the investment committee is check whether a risk is within this pre-agreed frame. Then and if the investment committee decides it's a good risk, then it's automatically bound by Hanover Re. And secondly, also to do a little bit of a portfolio decision, so not to have all risk from one territory, but spread it around as any decent investment manager would do. So from our perspective, it is important that we are working on a commercially sound basis, and I'm confident sustainability can only be achieved if all parties involved through the full chain in the long term will have benefits. And this can only work if it's commercially sound.
Perfect. Thanks. I'm conscious of time, and so I want to give some room for questions and answers. So I'm going to move to one last question to each of you, Henning and Stefan, and then we'll open it up to a broader discussion with the group. So starting with you, Henning, you know, now that we've got a year behind us and we've got some real good successes under our belts, and we see lots of different areas where, you know, the various parties are collaborating quite well. You know, how do you, what's your vision for how this partnership can grow and perhaps even more broadly Hanover's contribution to the broader protection gap efforts that are ongoing?
We are not yet in the final stage. We have nicely started over the last 12 months, but there's lots of room to do more risks, higher risks, new structures, new concepts. And from the Hanover Re perspective, I can see us very much so to increase our support. For example, by increasing the $50 million limits, which we currently have, to increase this substantially to further support the NDF. In the long term, I think many countries will adopt ideas like this or semi-government institutions, and I see in the long term really a lot of increasing business for the benefit of all involved. And maybe you just add one point on which nicely shows the positives of this public-private partnership here. The private sector brings in risk capacity, expertise, maybe access to certain risks if required, But the public sector in particular may bring in also other aspects, like recommending to governments or semi-government institutions the advantages of these structures, forwarding best practice thoughts, creating awareness for important things like having decent data and technology in place. So I think this, and for example, reaching out to thousands and thousands of people is nothing which Hanover Re could do. So here, the partners of the NDF, including the governments, play a role. So I think this is a perfect fit for the private and the public sector.
Perfect. Thank you very much. I think Stefan, give you the last words here. I think sort of very similar question from your perspective in the public sector side. I mean, certainly there's a vast range of efforts that you all are engaged in supporting the protection gap and or the closing the protection gap in different ways and around insurance and other mechanisms. But for the NDF particularly, how do you see this? What's your vision for the years to come and your engagement with this program?
You're perfectly right. The NDF is one instrument of the German contribution to the Insurance Global Partnership. So at the same time, I think it's a very important one, because what we want to do is to kickstart this large-scale transfer of risk, and I'm repeating myself, from developing countries to international reinsurance and capital markets. And that should not be in the millions, but we want to reach billions, not only through the NDF, but be the trendsetter, be an example for others to follow, to emulate, and maybe to surpass in their capacity that they provide and the solution that they provide. So this is our initiative here should show that it's possible, demonstrate interesting new designs, and then make competition that really takes the climate risk out of developing country and puts it onto shoulders that are more capable of carrying them.
Great. No, it's really compelling. And thank you both very much for taking a bit of time out to give us this vision for, what we've done so far and where it's going. I think we're all really excited about, as we look back at this year, what we've accomplished, and I think just eager to see what we can do in the coming years together as well. So very much appreciate the support and hope we can continue to grow in this way. Just to move to the last section while we have a few more minutes here with everyone on, I want to bring back my colleagues from the earlier part. Wendy, Juan, and Toby are going to come back on, and also I want to invite Leif Heimfarth from Hanover Re to join as well. He is the member of the investment committee from Hanover that sits on the NDF, and I think has some unique insights into, certainly his background is very much in the parametric space, and so he's well placed to support us in that role. But just to kick off the sort of question and answer, I wanted to bring him in and give him the first question. But in the meantime, feel free among the audience to send any questions through chat, or just tap the hand raise option, and we'll call on you to ask this panel of from various organizations whatever questions you may have. We'll have about 10 minutes or so for the questions after this. So Leif, to you, in your role as in the investment committee, and sort of your vast experience in this space, can you just give us a few words on how pricing is determined, and sort of the role of the investment committee and the criteria really that you focus on to evaluate each deal? I think one question that often comes up is there a subsidy, for example, built into pricing somehow because of the public involvement? So maybe you can articulate from the investment committee's perspective, how do you think about deals and pricing and underwriting?
Yeah, thank you, Dan. Let us focus on the criteria. So let me mention first that the role in the investment committee is something completely different from a typical reinsurance participation, where you have just one or just a few engagements around a contract renewal. So in our investment committee, we're having these ongoing engagement with the team of Global Parametrics on a risk by risk basis. And besides the risks, where Henning have mentioned already some criteria to belong to the reinsurance contract, so the investment committee have a look on all deals backed by the NDF capital. And for our work there, the team brings in always a very comprehensive investment memo, which including several aspects like the background or the intention of the risk protection buyer, the type of risks, the product structure, the utilized data sets, and as well as the pricing. The criteria which we focusing on, or the key criteria, is first to check if the risk falls already under the mandate of the Natural Disaster Fund. That means including them in developmental, sustainable, or ecological components of the policies. Subsequently, we would focus on the fit of data and product structure to ensure that always we work under an acceptable degree of basis risk. We're having, as third point, the commercial pricing, because sustainability only works if all parties involved benefit in the long term. And as fourth criteria, so besides the evaluation of these actual risks, we're also discussing the structures as such, the technology behind them, and also the partners involved with regard to their potential to replicate these things in other geographical areas or for future approaches. The fifth point and the last criteria which I want to mention is that the individual deals have to fit into the bigger picture of the aggregated portfolio of the Natural Disaster Fund and for the further pipeline and further development strategy of the fund. So I think these are the criteria where we have a look on in that rounds. But besides this, with these discussions which we have in the investment committees, there's normally enough room to discuss multifaceted points with the technical team and always the exchange of new ideas.
Great, thanks, Leif. So maybe turn it to the audience here. We have about 10 minutes or a little less. Feel free to raise a hand or just even send anything over on chat if you have any questions about the transactions we presented at the beginning. You know, we went through 3 interesting transactions. We were happy to sort of talk. Our team here is ready to talk through any of those if you had specific questions about the nature of the products, how the impact approach works, how the beneficiaries ultimately are served through these transactions, or more broadly, how the NDF operates. And we have certainly great representation here of the NDF parties. Looking. Okay, not seeing too many hands. Maybe I can throw out another 1 or 2 more questions. And oh, there's one. Daniel, great. Go ahead, unmute yourself and take the floor, Daniel.
Thank you, Dan, and hi to everyone. Great to be here today. Just a question mostly related, I guess, to Hannover Re on what your plan, to which extent you're thinking about extending or tapping more into alternative capital, like insurance-linked securities investors and these sort of capital market investors that are looking into insurance risk for the benefit of the NDF and ultimately then the benefit of or the targets of the Insure Resilience Global Partnership towards poor and vulnerable people. Thank you.
Great, thanks, Daniel, and good to see you. Yeah, Henning, to you, I think that
I can easily take this. Actually, I had in one of my notes put down the word ILS. As Hannover Re, for many years, we very strongly worked with the capital markets and the insurance-linked security markets. Purely from the Hannover Re perspective, has at this stage nothing to do with the NDF. If for the size of the risks we have so far in the NDF, they are very nicely and easily absorbed by the current limits. The ILS markets may come in either on a single very large transaction or on a significant broadening of this or other types of transactions, at which stage indeed institutional investors may then have an interest to come in. Investors, or in particular insurance-linked securities investors, in principle like parametric covers because they are transparent. You know when you've lost your money. So generally there should be a good fit, but for the time being, risks are not yet, have simply not been large enough yet to really tap into that ILS capital. In the long term, indeed, I could see a blend either on a single large risk or on a more general basis. And from the Henry perspective, we very strongly work with many of the large insurance-linked securities investors, and probably have also good access to the various risk appetites from these. Is it an answer to your question?
Yes, absolutely. Thank you very much. And I guess, yeah, as you said, with size or increasing volume, probably that might be a more viable consideration. Thank you.
Thanks, Annie. Thanks, Daniel. I see another question coming from Catherine Sarah Miles, and it's Toby, our representative on the gender working group from the Insure Resilience. She's asking specifically to you, Toby. I guess she knows your association with this activity, but how have you measured gender differential impact of the scheme? So the elements of gender that are so prominent in the Insure Resilience efforts these days. Maybe you can speak a little bit about that.
No problem, and thank you, Catherine, for the question, and also congratulations on the launch of the Centre of Excellence for Gender Smart Solutions. I think it's a fantastic effort, and it will link very much closely into what we do. So there's sort of three key parts on how we sort of address gender differential. One is, as we've spoken before, the products we're producing are parametric products which pay out on and based off economic impact rather than asset loss. And we all know there is a differential in asset ownership between men and women, particularly in poor and vulnerable communities. So that's one way where we help in the solutions that we do. The other one is that the partners that we work with, and including a good example, very good example would be VisionFund International, have a very strong female beneficiary base. In most of actually in a lot of these programs that we work on, there is that sort of that strong aspect there, and it's measured on the ground side of it too. So you have both the measure on the ground of the individual clients, you have the measure on the actual product you're producing, and then finally, after the fact, you can actually have a monitoring and evaluation after something happens. So for instance, who's receiving, in the VisionFund case, is it the loans, or in the Acre Fund program, how that's being helped on that side. So you've got sort of those sort of three aspects. But I think that there's a lot more work to be done on this, and that's why it's so great that this Centre of Excellence has been launched today.
Great. Thanks, Toby. We're all coming up to the end of the hour here. Any other questions from the audience? Moment. There's one point that we skipped over in the discussion, Stefan. I might want to come back to you, just as we are in the process of sort of bringing to operations the technical assistance facility that's been or grant funding that DMZ has put forward. Maybe you could just, in the last moments here, give a few words as to why that funding is important, how it's intended to be used, and sort of how it supports the broader vision of the NDF.
Mm-hmm. Yeah. Well, we all know that the design and structuring of the bespoke products for clients can be very time and cost intensive, and this is often a hurdle for especially non-commercial Meso-Level intermediaries that GP has been working with. So the grant that is allocated to the NDF and will help to lessen the product development cost for specific clients that are non-commercial, mainly in the humanitarian space, and want basically to purchase such a cover. However, that cover would then have to be paid on the commercial terms of the derivative, right? So, GP would present the grant proposal together with the developer as part of the development memo to the development committee of the NDF. They would lay out what kind of work should be financed with that, what it would cost, and would argue to use part of the limited resources that go into the grant or that come from the grant to be applied to the specific client and the specific product.
Perfect. Thanks, Stefan. And I guess now that we're sort of coming to the end here, any last sort of parting words, maybe from you and then from Henning, just before we sign off? Or feel like you've said plenty, but just to give you one more chance if there's anything we left off.
Stefan, you go ahead.
Yeah, thanks. I don't have anything further. I'm looking forward to growing this vehicle, seeing it grow in volume and more transactions, and with the current transaction growing in volume, just as the VisionFund one has done from 5 countries to 15. And we're looking forward to covering all of VisionFund affiliates soon, and then expanding to other microfinance networks beyond that, for example. And so that's what I'm looking for, and looking forward to working with you all on. Henning.
I would happily echo your comment, Stefan. One item which came to my mind in order to develop this further over the next couple of years, I think one thing is very important: to have reliable data. And data in the developed countries is reasonably easy, but in a lot of countries, it may be helpful to think about this, because once numbers get larger, once capital markets or insurance-linked securities markets shall be included, there's always a look at the models, and models work better when the data is good and reliable. So in the long term, it may be good if all recommend to entities have good and reliable data. It will help us all.
Great parting words, and certainly data is fundamental to getting good parametric products, among other things, and getting the impacts that we seek here. Well, thank you both, and thanks to the GP team as well for this great discussion, and thanks to our audience for sticking around. Some of you probably late at night, others probably earlier in the morning. So really good discussion here, I think, and we really know many of the names that we see here, but some of them we don't. So we're happy. Please feel free to reach out to us about any of what we discussed. We're very happy to give you more background on these efforts we've talked about, and talk about other collaborations that might be of interest. And certainly, as this is 1 year on from last year's announcement, we hope that next year we can come back with even more to say about this collaboration, how it's grown since then. So thank you, everyone, and look forward to the discussions tomorrow in Annual Forum and beyond. So take care, everyone.
Thank you. Bye-bye.
Thank you.